Hi guys, welcome to Investing with JYK, and today we'll do the second part of Jiangsu Expressway. So last time I talked about how this is essentially a regional monopoly, and it has plenty of pricing power, and it's currently selling at a fairly cheap price. So today we'll look a bit further into the individual expressways that it owns, as well as some potential risks. So I made a spreadsheet, and it is here. It owns about 12 expressways with different incomes from all of them, and then it has about five expansions. So it's currently investing in another five projects. Now, they gave in their annual report, they gave the average daily fee from all these highways, these expressways. And you can see that the highest one is the namesake Ninghu Gaosu, which is Jiangsu to, it's actually Huning Gaosu. Anyways, it's a namesake of this company, and that thing has a limit of 2032. So until 2032, this company can keep collecting money. And there's some of them that's until 2029, and some that are a little further out. And then one is that's supposed to end in 2019. There's a bridge. And so bridges in China typically cannot excuse me. Sorry. Typically cannot exceed 25 years, the period in which you can collect fee, and the sometimes it's only 20 years. So I read somewhere it's 2019, but I really have no clear idea. So this is what I really dislike about Chinese annual report. You would think, this is a very important part of this company. When up to what time can you collect fee on each of your assets? But that's not mentioned anywhere in this annual report. The only thing that you can kind of guess, right? So if you look for intangibles, it would actually, tell you how much intangibles it has, and it would here. That's one. It says the chartered like the right to manage a highway, an expressway, is 25 to 35 years. So they would depreciate that intangible during this time. But I don't exactly know which one's which, right? It's so, and then the other thing is, if you look at the intangibles here, this is quite small. That's like 1.7 billion. So here you have a 30 billion yuan the right to manage, and it is reduced by 332 million this year. So it looks like you actually have 30,004 046,991 divided by 32343022. That is quite weird. Oh no, sorry, that's not what we should be looking at. What we should be looking at is here. Right, so that will tell us what the percentage is. So that divided by this thing is like 3.7%. So it is correct, but I still really want to know exactly which one goes into what. So that's not available. That's very unfortunate. So I tried to project things out. They did break out most. So there was a section in here that breaks out, let's see, the revenue, and so that here is the section that tells you the daily revenue, and then there's a comparison. You can see it grows about, so some of them will grow, like the biggest one is 5%, 5 to 6%, and some of them actually grow a lot, but this one is tiny anyway, so who cares? It's like 90,000 yuan a day. It's really tiny. But yeah, some of them actually, oh, where is that? Yeah, here we go. This tells you what the revenue is, what the cost is, and what the gross margin is. And so, you know, clearly this thing has the highest gross margin. I want this quite a lot. And if you go down, this one is very high gross margin too, but this one's clearly much worse, and this one's worse still, and yeah, all that. So yeah, so it's and you can see the format is pretty messed up. Like, how do you read this? Jesus Christ. Yeah. I don't know if I can find the other one. So it does tell me like some breakdown of different costs and everything. So I try to break it out, and cash profit should be around 7 billion a year, but that's not what is shown in the cash flow statement. So on cash flow statement, it shows about 5 billion yuan cash flow from operating activities. So let's take the lower count, and then let's assume, because this is just 1% of the whole thing, so this thing that's about to expire, let's assume we don't get that, and it doesn't really matter in this case. Sorry, is it 1%? No, it's 10%. So let's assume it does not exist. I don't actually know. So it's like 4 point, maybe it's going to be like 4 billion going on from after 2019, right? So let's just project out how much money this thing can generate. Right. There we go. Where is the cash flow? Here. About 5.2. So, okay, so let's say we're going to do 5.2 a year. And assuming, you know, I'm just going to be lazy to say that they all expire, the right all goes away by 2032. Because really, there are things that are more and things that are, you know, less. But the biggest one is 2032, so let's just assume it's going to be 2032. So 2018. Well, this is 17. Oops. Assume this thing's going to go to 32. Right, and then assuming this thing's going to grow by 5% a year, which is actually an underestimate because the economy grows at more than 6% a year, and car ownership, there was car ownership actually goes up more in Jiangsu. Yeah. See here, the car ownership actually went up 12%. Private ownership went up 10%. So 5% is really an underestimate. I might change that. So let's assume, this is just going to be, whoops. 1.05. And so let's see. Let's format this. Cool. And all the way down, and we said that after 2019, starting, let's say 2020, you have to subtract this guy here times 1.05 times 1.05, right? So that's what we have. Obviously, there are some more that will come into play, but for now, let's say ignore these for now. So these are the future cash flows. But let's say that's it. And let's say we discount the whole thing by 10% a year. So 2018, let's assume we're still at the beginning of 2018. It's not to make the calculation easier. So that equals that, basically. And so let's say the discount, this is 1, 2, well, it's like more like 0, 1, 2. So those are the number of years. And because we're doing a DCF, the value of this is going to be, actually, this should really be 1. Right, so this is going to be, this is so dumb. This guy multiplied, well, divide by 1.1, so let's assume we take 10% discount rate to the power of that, right? And we keep going. So that's the total operating cash flow. And if we add this all up, obviously I want this thing to be in financial as well. And if we add this up, this equals exactly 50 billion yuan, that is, right? So 50 billion yuan. And if you look at the share price, it's somewhere here. No, not here. Here, I think. Yeah. It's at 9.51 Hong Kong dollars per share. And the number of shares is here. 5 billion. So this is 50 billion, sorry. So then really you're looking at that times this Hong Kong dollars, right? So, oh God, let's just make it all that. Okay, so this is Hong Kong dollars, market cap HKD, and let's say we turn that into Chinese yuan. I'm just gonna do HKD to CNY. That is only 41 billion yuan. So you are getting a fairly decent discount over the expected future cash flow. And yeah, so you're really looking at an 18% discount already, and that's based on the assumption that this whole thing only grows by 5% a year, which is probably underestimate, and then you expect a 10% return, right? So if we want to make it more realistic, we can make it, something like maybe 7%. Right? So 7% going all the way down. Obviously, I still have to subtract. In 2020, I have to subtract this guy here. 1.07 times 1.07. So you read it at 57 and say, so let's say what is the expected return? So essentially we're trying to calculate IRR. Right, so let's say we make it, instead of 1.1, let's say we make it 1.15. See what happens. 42. So 1.15 is not sustainable. 1.13, then, yeah, it's about right. So if you buy at the current price, what you can expect, I would say, is about a 13% annual return if you buy at the current market cap. And on top of that, you get some of these guys kind of for free, since they're still constructing these. The future, there will be other future cash flow. So yeah, and that's why I think this thing currently is a fairly good deal. Obviously, there's the calculation I made here is extremely rough. The numbers, each expressway has its own unique problem. For example, this guy here is actually ramping up, so the growth is probably going to be crazy. You really don't know, and there might be economic recessions in China which will hit. But again, we're assuming the growth is going to be quite small, at 7% a year. And we also did not assume that there would be any cash flow coming, like additional earnings coming from, say, their, I think they call ancillary services, essentially selling fuel or selling food in rest areas. So we're not counting any of that stuff. And yeah, and the other thing I would like to, well, in terms of risks, there are two that I can think of that one is going to be political. So, in 2012, there was a news that the government reduced the price. Right. So, again, can this happen in the future? We don't know. So, second thing is, second thing I really don't like is their chairman has, I don't want this, I want that. The chairman literally has 0 shares. Yeah, and their CEO has 0 shares. I mean, it doesn't get paid much either, but it's kind of crazy. So I really want them to be, reasonable shareholders, like significant shareholders, but they're not. So it's kind of unfortunate. This is, in the end, it's quite it's just a state-owned enterprise, but the government wants the payment too. So if you look at the dividend, they pay quite a bit. 80% profit in 2015, 63, 61% 2016 and 17. So they seem to be reasonably shareholder friendly. And they have fairly steady cash flow and everything. So yeah, so I like this company, but keep in mind of the risks. And I have to complain about the Chinese annual reports. Tell me all the things I want to know. This is stupid. They just don't tell me the duration of each expressway. It's very annoying. Anyway, that's it for Jiangsu Expressway, and see you next time.